Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin had just was bouncing off this 10,000, really $9,950 zone. Was looking for a break back up above this $10,650 zone. Told you if it did break above that zone, next stop was likely going to be this 11,050. Price did break up, almost hitting that $11,050 target, almost to the dollar, rejecting there, not once, not twice, but 3 times before breaking down. Actually, to be fair, it was only 2 times. Didn't quite make it up this on the first attempt there, but then rejecting twice, double tap on the top, and then of course breaking down here. And now, of course, we came down, found support on that $10,650 zone. Of course, found support on there for about 8 hours, 8 to 12 hours ish, and then of course we just had this massive breakdown, finding support once again at the prior local low of this $9,950 zone, guys, wicking just below it. Problem I'm seeing here is, yes, technically we would call this a double bottom. If I want to get very, very technical, if I zoom in here, guys, we can see the low of this candle was $9,857. We can see the low of this candle, $9,852. So we have a $5 slightly lower low on this candle. Now, technically, again, I can accept that as basically just a double bottom, no big deal. But again, technically, my radar is going up because now we have a lower low. Now we technically have a lower low here. Now again, it's $5. It's nothing when you know, in the scheme of things here. But it does certainly start to look like, as we were talking about yesterday, guys, when we did break down here below this $10,650 zone, as I said yesterday, even with breaking up here, guys, the nod is going to be in favor of the bears until we can decisively break back up above $11,050, guys. And this is why we say that. Yes, we came up. Yes, this may have given you a trading opportunity, even though we didn't technically get an open and close. So we really didn't get, depending on your strategy, if you're waiting for the 4-hour open and close above this $10,650 zone, you didn't get that, and you're not always going to, guys. This is not about there's no strategy that works 100% of the time, not at all. And so most of the time people get frustrated and they start front running, and that's when you start losing things. Remember, just because you didn't happen to get in on this doesn't mean that you lost anything. You're not always going to have a winning trade, and every winning strategy isn't going to work most of the time. The strategies that are the most successful are the ones that work when you get a buy signal. They actually come through and you end up making a profit, number one. And number two, they protect the profits that you do have and minimize your losses. That doesn't mean you're going to get a lot of trades. That just means that when you do see a trade entry that meets the strategy that you're using, it will more often than not be a winning trade. Now, not all the time, but more often than not. And that's all trading is, having more wins than losses. So anyway, not to get off on a tangent. So the question is, where are we now? Now we're coming back down, testing this $9,950 zone. Again, even though technically we are on a lower low here, I can accept that. You know, $5 is nothing on Bitcoin here. Right now, just basically double bottoming. Let's see if we can get a nice bounce off this zone. What I'm not liking is if I zoom in here and I throw on volume on this hourly, we broke down here on some pretty strong volume. So again, this was to be respected, and this is what I pointed out yesterday, guys, when we broke down here. Again, looking at the hourly, we can see that we broke down here on some pretty strong volume. So again, that breakdown was to be respected. Those people that are saying this is a bear trap, it may end up being a bear trap. That's certainly possible. Certainly possible. Not out of the woods yet, but I'm not so quick to say that. Now again, that's still a possibility until we get a decisive break below 9,950. As I've been saying, guys, we are still holding up technically a higher high from this prior low that was set back here on July the 22nd. So as long as we're above that, technically, yes, this could be viewed as a bear trap. But if this was a bear trap, guys, again, it's certainly hiding itself very well. As we pointed out before, guys, we did break down here on what is now a verified head and shoulders pattern here. I know this was kind of a controversial call for some people, saying that no, this didn't meet the volume signature. I disagree with that. I thought that if you were using this, it didn't. If you were using this as the left shoulder, it absolutely did. And of course, we did end up breaking down here, guys. And Now the target, the only thing that's not holding up with that as of now is the target on this thing was down here at 9,400. Now yes, we still could get to that target. Typically it would have happened a little bit quicker and we would not have had quite the bounce that we had here. But again, nothing is perfect, guys, and I am still looking at this target down here at 9,400 if and when we do get that decisive break below $9,950. Now, that all being said, guys, if I zoom out here, we look at our indicators, we're looking at the 4-hour here. I will say that I don't know that it's going to be a very quick drop, at least not below $9,400. I may be dropping down to 9,400, but again, I would expect a decent bounce off that zone. Pointing that out because if we zoom in here on the 4-hour, let's just go back in history here. If we zoom in here on the 4-hour, we can see this 4-hour has done a fairly decent job of calling out areas of divergence here and areas of a potential bounce in the at least in the recent future. If I go from point to point here, what do we clearly have? Price created a lower low. If I look at the histogram, I go from the exact same point, looking at the MACD here. What do we have? What does that histogram show? Histogram shows a higher low. Now clearly this was in a downtrend. We're looking at the bottom of the histogram, so that would be just regular divergence. So in this case, we're showing regular bullish divergence. The histogram created a higher low, price created a lower low. That is bullish divergence, and what happened with that? We got a nice spike all the way down here from 10,000, really 9,950, all the way up to about $11,060. So a nice little spike, nice little swing trade. Now clearly we had visual support, we called that out, but of course we did have that divergence that also was backing that up. So this did do a decent job of calling out some bullish divergence. Why am I pointing that out now? Because that's already played out, obviously. I'm pointing that out now because what does it look like price is about to do here? Price is about to break down again. If price does end up breaking down here fairly quickly and breaks this zone, and that's a big if, but if it does end up breaking below this zone, what are we going to have? Let's say price breaks down here to this $9,400 zone or anywhere within this area. Obviously, what would happen here? Price would create, if it did break down, what would happen? Price would create a lower low there, right? So we would have price creating a lower low. What would happen on the histogram here as soon as we ended up breaking down here? Because the histogram hasn't even crossed into bearish territory yet. So if it was to break down here, if the histogram was to kind of end up breaking down here, cross over into bearish territory, by then price would be down here somewhere around that 9,495 or 9,400, 9,500, somewhere thereabouts. And of course, if that were the case, what would we be immediately showing in this overall downtrend here that we're in? Well, we would go point to point, and of course, what would we see? We would see again bullish divergence, which would again suggest a possible quick bounce here. And to be technical here, we are kind of, again, this is not technically bullish divergence, but this is certainly hinting at it. And of course, we can take that as a potential area for bounce. Now, of course, we know this is not only a visual support, but we also know that this area is also a technical support. If I pull out here, let me just get rid of this. There we go, pulling out here to the daily chart so we can see it a little bit better. And then taking this whole structure into account, so going our swing low to that swing high, where are we hitting? Again, this is why I pointed out, this is why I was telling you this $10,000 or really $9,950 zone was very likely going to get bounced on a couple times, because this was not only a visual support, this was a technical support with our fib level, that golden pocket right there between the 618 and the 65 fib level, and really where that golden ratio right at the 618 is holding strong, just barely wicking into the golden pocket there. So telling you there is a lot of support there, aka a lot of buyers there. As of right now. Now, of course, that could break down, but this is why we're getting quite a few hits off this zone, and price seems unable to break through it as of yet. But as I said, guys, since we broke down through that $10,600 zone, we've now come back up, tested what was support. Clearly, this $11,050 zone was support, is now technically acting as resistance, which is a bearish sign, and price is now following through. Now, again, could this whole thing be a bear trap? Sure, that's possible. I think it's more likely we may take another bounce off this golden pocket, maybe wicking down below here a little bit, maybe touching, you know, this 10,000 or $9,700 zone, something like that. Maybe even falling down to 9,400. But I would look for a bounce in this zone, maybe somewhere between current price point, and if we get a 4-hour open and close below 9,950, as I said, I do think we're coming down to 9,400, and I do think if it does happen that way, we would get a nice bounce off that zone, if not prior. So we'll have to wait and see kind of how this plays out. But this is suggesting if we do break down, it will get a nice bounce, and you will have a decent potential to scalp. Of course, if it may not make it all the way down here to 9,400 to scalp, but hey, not everything works out the way that we want it to work, but it is suggesting a potential bounce anytime between its current price point, or if it does continue down, possibly down to as low as 9,400. Now, pulling back out here on the daily, you know, this whole structure, I've seen everybody call this structure every little thing, an ascending triangle, or excuse me, not an ascending triangle, um, symmetrical wedge, which I would agree this was technically a symmetrical wedge, even though I didn't like that we only tested the top twice there. It was a very sloppy one, but nonetheless, it did break out, so fair enough. Of course, I've seen now I'm seeing people redraw this from using the body, so now they're drawing this as a wick and viewing this as one big, huge possible continuation, one big, huge, possible symmetrical wedge, which I don't view it that way at all. I truly don't. And as I'm talking here, we are breaking down. We do now have, technically, guys, sorry to breaking news. I feel like a news anchor here. Breaking news, we have now, without question, there's no this is no longer can no longer be considered a double bottom. We have now decisively broken down, and so now we do officially have, at least on the smaller time frames, a lower low here. Let's wait and see if it does break down below. Let's see, what did we create here? The low here was 9,651. 9,007. We're getting very, very close to that. So it's going to be very interesting to see in real time if we can come back down here to this 9,400, and if we do in fact get that bounce at 9,400 or somewhere in between there. In other words, are we seeing that bearish divergence play out right away as I just drew out here? And sure enough, here comes the histogram. We are now crossing. We just had a fresh cross of the histogram. We just had the fresh cross of the MACD line crossing below the signal line here, guys. So as I just was talking about 5 minutes earlier, we are seeing it play out in real time. Now we do officially have what looks like bullish divergence here. Excuse me, guys. Yeah, what is bullish divergence here as of now? Now, technically, this could continue down. This is not confirmed yet. To get confirmed, we have to have a bounce. We have to have at least one candle bounce and continue to the upside to put in a nice bottom here to confirm that divergence. But it is certainly suggesting some bullish divergence and suggesting a nice bounce here. And now we also officially have a lower low here from this prior low at 9,651. We just put in a new low of 9,575. So we do now have a new low. We are no longer creating higher lows. This is bearish, and as I was saying yesterday, guys, the favor is definitely is nodding towards the bears. Now, could we get a nice bounce off this zone? Could this still be this is not going to be a bear trap, because a bear trap would have implied we would have bounced much earlier. The measured move off that head and shoulders was right down there to that $9,400 zone. So we are within the margin of error of that. So we have played out this head and shoulders pattern now. As of now, guys, this has ended up playing out, and this is confirmed. So even if we did get a bounce off this zone, you could not categorize that as a bear trap on the micro level. On the macro level, maybe, but certainly not on the micro level. And if we pull out here to the daily, guys, you can see what we're looking at here. You can see this prior area of consolidation right here. And just pull this over here, you can see why we're looking at this area as a potential area of support. And we can see this this area in the past, what did act as support was acting as resistance basically all from the, May the 26th all the way throughout until we broke out here and then consolidated on top of that zone. So this 9,400 all the way down to about 9,000 is a very relevant area of support that I would expect to get some kind of a bounce off of, as we can see. And this is just amazing. This measured move is going to come down and literally looks like it's going to touch this 9,400. Let's see if we can make it down there to the dollar. I apologize, guys. I'm probably delaying this video. I'm going to pause it because I don't want to I don't want to bore you guys. Let me pause it real quick. Actually, instead of pausing it, guys, I'm going to run over here and look at the moving averages, exponential moving averages, and our Bollinger Bands. We can see we're looking at the 4-hour now. As we discussed yesterday, we broke below the 200 simple, guys, came back up, massive resistance, found resistance also on the 21 exponential and the 200 simple, guys, and then, of course, a major breakdown here. I told you yesterday that this was a very bearish setup. We had the 50 simple on top of the 55 exponential, which was on top of the 21 exponential on top of the 8 exponential, guys. Very, very bearish setup, as I discussed yesterday, guys, and this is why the nod was without question in favor of the bears. Going on here to the daily. As I also told you yesterday, guys, if we did have that daily candle yesterday close below the 21-day EMA, this is why that 21-day EMA is so important, guys. This is why I have so much faith in it. As I showed you guys, this 21-day exponential gave us showed us the bulls were fighting all throughout this. Once we broke below it, as I said, that's not a decisive break. Yesterday, we came back up here. Okay, maybe the bulls have some fight left in them. Let's see if we can get back up the 21 exponential. And well, yesterday, that was a decent day for the bulls. We still closed below the 21 exponential, which gave us our decisive break below the 21 exponential. So we've now had a decisive open and close as of yesterday below the 21-day EMA. So this was your sell signal, guys. This is why it's so important. And yes, you may have wanted to hold on, but if you're trading on technical analysis and not on your bias or opinion, then this would have been your sell signal. Yesterday, we had the final open and close. We had the decisive break below the 21-day EMA, and we can see we've got this bearish engulfing candle the following day after, which has now broken below the 50 simple 50 simple moving average as well as the 55 exponential, guys. So again, that was your signal. Let's go ahead and check the weekly. All right, the weekly, we are looking at the 8-week EMA, and as I said yesterday, guys, the first time that we are actually testing is this weekly candle, the 8-week EMA. We have not decisively broken below it yet, and let's see if we can find some support here. As of now, it is finding support on the 8-weekly EMA. If this does break down, it would suggest on the weekly chart a drop down to about 9,000, which would coincide nicely with that $9,400 to $9,000 area of consolidation that if I throw the daily back on, we saw right back in here. So let's wait and see if that does end up playing out. Let's go ahead and check longs and shorts very, very quickly. Let me put on the 4-hour because that gives us a better idea. Putting on the 4-hour, shorts are very neutral. Shorts are very neutral, which actually is a healthy sign that people aren't complete idiots. Long positions are actually holding up fairly strong. I'm a little bit surprised here. They're not yet getting stopped out, at least not yet. That may end up holding out, guys, so it means they're probably expecting a bounce here, which actually is a bearish sign. Actually means price may end up continuing lower. I would say if longs were getting liquidated here, then we probably expect a bounce much sooner. Let's wait and see if that does happen. Coming out here and checking the CME chart, guys, this is a little bit controversial. Yesterday, price did come up, reach about as high as $11,155 on the CME chart. Remember, that's a little bit different. Prices on the CME chart's a little bit different than prices on spot, or a little bit higher on the CME chart. So coming up here, we technically had this gap. On the 4-hour, we had this gap basically between $10,050 and $11,630. Now, this is a little bit controversial, guys, and I can honestly understand both sides. Looking at this, no, we have not filled this gap, and I warned you guys yesterday that this was going to be a major area of resistance, and of course, we obviously see that that's exactly what that was. There were a lot of sell orders sitting in here, which is all resistance is, right? Just a lot of sell orders, major resistance, and rejected hard. However, if I pull out here to the daily chart, we've got people making the case that no, this gap is filled. And if I get rid of this, you can see that we can see wick to wick here. It's very close, very, very close, within a few dollars here. I think it's within about $40 of closing the gap. So even on the daily, it's not technically closed, but if it was within $40, you could say, okay, maybe I can accept that. Maybe I can accept that as a closed gap. So some people are calling this gap closed. Personally, I don't think that it is. Either way, the result is the same. Regardless of whether or not it is closed, whether or not it isn't closed, eventually price, I believe, is going to come back up here and continue to the upside. The problem with this is as I told you yesterday, I didn't want to see this gap get filled before this gap was getting filled, and this is why. This is why. Because I didn't want to see that hard rejection here, which we knew we would likely get. And if that happened, we knew that the next target, if we got a strong rejection, was going to be coming back down here to try to fill this $8,500 gap. And so this is exactly the scenario I warned about last time, and this is exactly, as of right now, what's playing out. Now, will we come down here and fill this $8,500 gap? I have no idea. Of course, we got a lot of support to try to get through before that happened. But of course, the general idea was still correct yesterday. I didn't want to try to fill this gap first. I wanted this to get taken out first, and this is exactly why. All right, zooming back into the 4-hour here, guys, we did just get that little bit of a bounce here, guys. If you were trading, if you were looking to pick up a trade down there at $9,400 area, we did just get a nice little bounce off that zone. Did we actually get to 9,400? We got to 9,426. So depending on where your buy orders were, you know, I would have put it either a little bit lower, or a little bit higher. Put a little bit higher, you would be in profit right now. I would encourage you not to get too greedy as of yet. I would at least increase your stop loss a little bit here. I would not get too greedy, or just wait for a potential second test here, because this may not be over. We just broke down on a whole lot of volume. Coming back up here again, as I pointed out, guys, as I literally in real time, which rarely happens, pointed out the potential for bullish divergence and getting at bounce. Of course, we did just see a little bit of a bounce. Is that going to be it? We'll have to wait and see. We are breaking down on a lot of volume. This is not yet confirmed bullish divergence, so I want to be very, very clear. It was just suggesting a potential bounce, and of course we did just get a little bit of a bounce. Let's wait and see if we get any follow through with that. As of right now, if you did take that, you're at about almost $300 in profit, and I would consider, again, I'm not going to give you financial advice at all. My buy order actually did not get filled. In full transparency, my buy order was sitting down there at about 9,380, but we'll see if it does end up getting filled at all, and we'll see if I even take that, if I even keep it there. All right, so where do we go from here, guys? I wouldn't be surprised if we do come back down here, test this $9,400 zone again, possibly wicking to below it. Little bounce off that zone, guys. Continuing up, I think we may retest this $9,950 zone, guys, for a second time. Maybe again. I'm certainly not betting on it as of yet. I just think it's a possibility. If we can clear above this zone decisively, if we get a 4-hour open and close above 9,950, then I'm going to think we may want to come back up and test this $10,650 range again. If we do not get an open and close above that, if we test this and reject hard, I do think we're going to come back down again. It's if we reject hard off of this after a bounce, I do think we're going to come back down, likely take out 9,400, and then of course I think it's going to be a drop down to our next zone at about 9,000 to 9,000 to 8,800 and $8,800, somewhere thereabouts, the bottom of this area of consolidation, which again is at about $8,900, somewhere thereabouts. So about a $500 drop if we get a decisive break below $9,400 there. So we'll have to wait and see kind of how this plays out for now, guys. I know that's not the thing that you want to hear, guys, and I know that's not the Moon Boy answer to all this. And as of right now, I'm still overall bullish, guys. I mean, looking at the weekly here, pulling out on the weekly, I mean, yes, the overall trend is still very bullish. Yes, we do have a nice blow off top here, which did end up finally following through here a couple weeks later. And yes, we may come down a little bit lower here, guys, but overall, let's go from the bottom here to the top. We've only retraced. We can see that we just now are breaking through that 382. So, I mean, if you're an Elliott wave trader, you know what I'm saying. If this was the bottom of our bear market, this being our wave 1, we're coming down for the wave 2, you know that the most of your wave 2, I think it's 60 to 65% of your second waves, or if you're not an Elliott wave trader, it would be your first retracement on a reversal, if this is in fact a reversal, is going to come between the 50 and the 618. So our target, just probability-wise, our target would be down here between about 7,200 and 8,500. And I'm not sure it's a coincidence that, of course, that 8,500 would fill that gap on CMEs. And remember, the same way, if I go back to that CME chart, guys, exactly the same way that, let me bring it up here very, very quickly, exactly the same way that this area, this gap up here, denoted an area of major resistance, a lot of sell orders. This area down here denotes an area of major support, a lot of buy orders. In other words, a demand zone. A lot of buy orders very likely sitting down here. Now, is that a 100% guarantee? No, but neither was this, and this ended up playing out as well. So more than likely, we are going to get a fairly significant bounce if and when we do come down and close this gap. And as you guys know, this is exactly what I have wanted to see. I wanted to see us close this $8,500 gap before continuing up and taking out this prior high. Now, I wanted to see it happen before closing this gap, and I would still argue that this gap is not closed, even though I know some analysts are saying that it is, and even though technically you can make an argument either way. It's very, when you dig down into things and you talk to the experts and you go back and forth, you can find an expert to say either or. Either this isn't filled or is filled, based on prior talks and analysis. So it really depends on your kind of your bias. Either way, the fact is, it does look like we may come down here and fill this $8,500 gap. We'll have to wait and see how it plays out. And again, it's all going to depend on if we can break down below that $9,000 to $9,400 prior area of consolidation. If we do break down below that, I will start to think that this $9,500 zone is going to be a very, very likely next target. All right, so to wrap this thing up in a bow, guys, this already went longer than I wanted, and I do apologize. I'm going to do comments and questions, answers to your questions on a follow-up video after this. This has already gone way too long, guys, so I apologize for that, but it just was happening in real time, so I kind of wanted to talk you through it in real time because it's very rare that does happen. So anyway, coming down here, guys, to wrap this thing up in a bow, I am looking for this thing to possibly come back down, retest a little bit deeper, wicking below 9,400, maybe wicking down to about 9,300-ish, somewhere thereabouts, somewhere in this prior zone here. Nice little bounce off of that zone, guys. Then I'm going to be looking for a bounce back up to potentially 9,700, if not this $9,950 zone. If that does break, of course, this $10,650 zone does come into play. And as I pointed out, guys, we are still showing some fairly serious potential bullish divergence on the 4-hour MACD there. So again, watch out for that potential bounce. Now, it certainly does not have to play out. That divergence is not confirmed yet. I just want to be very clear. I'm not telling you that is divergence. It is not yet confirmed. It is just suggesting divergence. So again, just want to be very, very clear. So looking for that bounce. However, it doesn't have to bounce here, guys. It still is a risky play. And so make sure you have your stop losses tight. If this area does break down decisively, and actually it's a little bit, this area is a little difficult because we do have a major area of support all the way down here, guys. All the way down between, really between about 9,400 and 8,900, this whole consolidation pattern. So this is a little bit difficult to kind of predict as far as how far that's going to go down. But I will say, if we do break down below about 8,900, then I'm going to be looking for, I would look for actually 8,900 is a decent support. This is a difficult zone. This is a very, very difficult zone to call, guys. I mean, we could bounce literally anywhere between 9,400 and 8,500, a very strong bounce anywhere between those zones. And I realize how frustrating that is to hear. I know that's frustrating to hear, guys. I really, really, really do. I would just say, if you are a buyer, I've been looking to add to my long-term positions in between 9,400 all the way down to and including 8,500. So with that position getting heavier as price goes down, the heavier buys sitting down here at 8,500. Until then, I'm very, very happy to kind of sit on my hands, maybe play small scalp trades here and there. But until we do, don't try to catch the falling knife all the time, guys. It's not always the best thing to do. Best thing to do sometimes is to just sit back, relax, and wait and see how this kind of all ends up playing out. Again, I know that's frustrating to hear, guys, but there you go. If you want somebody to tell you we're heading off to the moon, or we're dropping down to $1,000 tomorrow, then you're watching the wrong channel. I'm gonna go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comments section below. As always, appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.